Welcome to attend today Part 4 Corporate Secretariat and Compliance Exam Technique online workshop. And after we go through Part 1 to Part 3, we have covered Section A, B, C, and D from our syllabus. And for the final section, we will focus on Section E. And this topic, we will purely focus on the listing rule compliance. In particular, the main board listing rule chapter 13, 14, and 14A respectively. So that's the reason why today, unlike previous topic, we will take a look on company orders. But today focus, we will look on the listed company compliance. Let's say the listing rule as well as the SFO compliance. First of all, before we look at any past exam papers, you should know some major focus for each of the topic, under Section E. There are 3 topics covered on Section E, including Chapter 13 of the listing rule, that is the continuing obligation of the listed company. From that topic, there are 3 major areas which you should put more focus on, including inside information under the SFO and listing rule number 13.09. That is the duty of the directors in the listed company to disclose the inside information as soon as we set the practical. So that before we look at any past exam paper, we will focus on some general legal obligation for the director and officer under the SFO. And under Chapter 13 of the listing rule, there are also the disclosure requirements in case of the loan transaction. One is advance to the entity, which again, in the previous exam paper, there has been some question asked about provide the loan or guarantee to the entity, or provide the loan, financial assistance, and guarantee to our third company. So that they are very common in the Section B long question. And for next topic, we will focus on Chapter 14 of the listing rule, that is low-T-variable transaction. When you're talking about low-T-variable transaction, the side test calculation is very important. So that side tests are common topic in the previous exam paper, so that you should well prepare on all the 5 side tests and understand the formulas and how to make the calculation according to the question requirements. And there are also some questions asked about some type of transaction, like the share transaction, for example. And finally, we will also look at Chapter 14A of the listing rule regarding connected transaction. So that some topic and question may be overlapped just because one question may cover 2 or 3 of the topics, on Chapter 13, 14, and 14A respectively. So that's the reason why you should know what are connected transactions, how to identify the connected person from the question, and what is the CCT, and what is the continuing obligation when the company enter into the connected transaction. Before we look at any past exam paper, I would like to give you some more focus so that when you prepare for any answer on Section E, you can well prepare and understand all the focus on each of the topic. First of all, look at inside information, which is also one of the important topic in CSC. And for the listed company, the disclosure of inside information is very common. So that inside information disclosure is one of the popular questions in the examination. Before we look at any inside information disclosure requirements, what is inside information? And the definition under the SFO. So that according to Section 307A of the SFO, inside information should be consist of 3 key elements, including that the information must be specific. Later on we'll take a look on that. And because the information is in confidential basic, so that the information must not generally known to others, including the segment of the market we deal with or we could likely to deal with the company securities. And that is the major factors to determine a piece of information is inside information or not. That is, the information could be likely to have a material impact on the share price of the company. To make this more simple, Inside information refers to any information which is price sensitive, and any information may likely to have a material effect on the share price, including smooth up or smooth down the share price. Okay, so that there are many information every day for the listed company. How to classify the information as an inside information? First of all, what is the meaning of specific? Okay, there are two major examples on specific information. Okay, one is that the company prepare any financial information, which is quantitative, and the financial information itself is a specific information. Okay, once the account department prepare the monthly financial account and also prepare the budget and make the variance. In case the financial result is far more better than or greater than the sample correspondence periods, then the company should consider the profit alert and or profit warning announcement. And profit warning and profit alert are the typical example of inside information announcement. Okay, so that financial information is very specific for the company, and that is the board of director duties to determine whether the financial information is an inside information, and so that the information should be published as soon as reasonably practicable, even though the financial information has not yet been audited and subject to the auditor review and final confirmation. This is not a good idea. Before publishing any any result or income result, then 1 or 2 days, the company publishes the profit alert or profit warning announcement. This means that if the director has the knowledge on the financial information, then the disclosure of inside information by way of profit warning or profit alert is very important. And the second example is that there are many business transactions for the company. Of course, the transaction should be quite sizable, just in case the company has the intention to enter into any contract, let's say the execution or disposal of assets. Okay, so that the company needs to proceed some formality, including the execution of the memorandum of understanding, letter of intent, and non-disclosure agreement. And due diligence is also important before any execution of assets, business, or properties. We need to engage the professional party, like the lawyer, accountant, or the surveyor, in the due diligence process. And we also need to negotiate the terms of the sales and purchase agreement and also the consideration. So that's the reason why if the company has any plan, okay, and intend to enter into the transaction, even though the final agreement has not yet been finalized, the information of the transaction can be specific. Okay, so that even though this is only the general information, only the intention to acquire the assets or business, please consider the implication of inside information. Of course, the rumor, the rhetorical or very wishful thinking, and ostensibly contractual are not specific information. Okay, and the second element, of course, all the information should be put on a confidential basis. Okay, so that the inside information must not be genuine known to others. Again, rumor, media speculation, market expectation are not equal to information genuinely known to the market. Okay, so that with the information is the subject of media comments, analyst report, then the company should consider the accuracy, completeness, and reliability of the information to determine whether this is genuinely known to the market. Okay, so that should the material omission doubt as to this bona fide exists, the information is not genuinely known to the market and require full disclosure. The final element is the most important one. That is, the information could be likely to have a material effect on the price of the securities. Okay, one good example is that since the inside information is important to affect the share price, okay, so that anyone who has the knowledge on the inside information may be able to dealing with the company securities. Okay, so that the inside information could influence the persons who are accountants to or could be likely to dip in the company shares in deciding whether to buy or sell the securities. Okay, so that's the reason why the information is price sensitive. And this is also a criminal offense with anyone rely on inside information to have the dealing on the company's securities. Okay, so with the information can fulfill all of these three elements, then the information is regarded as inside information under the SFO. Okay, so that you should know section number 307B regarding the duty of the listed company and this officer, that as soon as reasonably practicable, after any inside information has come to this knowledge, disclose the inside information to the public. And also because of the listing rule, when the company publishes the inside information announcement, the announcement is mixed based on the SFO and also rule number 13.09. And there are two sections from 13.09, okay, including that in exchange view, there is or is likely to be a false market in the listed securities. Then the listed company must, as soon as practicable, after consultation with the Hong Kong Stock Exchange, announce the information to avoid a false market. Okay, so that's the reason why in the stock market, there may be some information which may cause false market, including that the information is untrue, misleading, or any omission, and the information is not published from the listed company itself. Okay, so that this information may also affect the share price, and the company is required to publish the announcement to clarify any information to avoid the false markets. And the other ones, 13.092, which is the most popular ones, with the listed company is required to publish the inside information announcement, just because the three elements has been specified so that according to the SFO, the listed company is required to disclose inside information by way of the announcement under the SFO. Okay, so that I give you the mind map here. When you study the topic of inside information, first of all, what are the three key elements of inside information? If there is any inside information, who has the duties? Okay, including that known to the corporation, that is the director and officers, has the knowledge or ought reasonably to have the knowledge on the inside information. Why this is the duty of the company to make the disclosure? Because according to the SFO, the duty of disclosure comes from the listed company, director, and officers. Okay, so that in case of reckless, careless, mistake, or negligence, and the director and officer fail to take the reasonable measure, that is the breach of the SFO. Because of the inside information, the company should disclose the information as soon as reasonably practicable. And also, if the company is unable to publish the announcement, this means that further time is required. As a result, this is common that the company may apply for trading halt, that is trading expansion with the stock exchange. Okay, so that after the publication of the inside information announcement, the trading of share can be resumed. And finally, let's also review safe harbor under the SFO. That is, the listed company can withhold to disclose inside information announcement. Okay, with certain criteria can be sacrificed. Okay, you should know some ideas on safe harbors. Okay, just because the SFO provides some exemption not to disclose the inside information announcement. Okay, the first one is safe harbor A. That is, the corporation is granted safe harbors with the disclosure could breach any Hong Kong court orders or any provision of other Hong Kong statutes. And the second one, which is the most important one, and safe harbor B, is commonly applied by many listed companies. Okay, that is, the corporation is granted safe harbor for information relating to an incomplete proposal or negotiation. Okay, including that, the company has executed the MOU and LOI with the third parties. And after the completion of due diligence, both parties is negotiating the terms of the contract as well as the consideration, but everything has not yet been finalized. So that's the reason why the confidentiality is very important to enjoy safe harbor B. Everything should be put on a highly confidential basis. Okay, or when the company decides to sell a major holding in other corporation, for example, or when the company is negotiating a share placing with a financial institution, or the corporation is negotiating the provision of financing with our creditors. Everything has not yet been finalized. Incomplete proposal or negotiation is still in progress. Remember, confidentiality is very important. With the confidentiality can be maintained, the company can be granted the safe harbor B. And safe harbor C referred to with the inside information itself is a trade secret. Trade secret, okay, is the company IP assets, which is used in trade or business. And the nature is confidential. This means that the trade secret is not already in the public domain. If the trade secret has been disclosed to this competitor, this could be liable to cause real or significant harm to the company business interests. And because of the nature of the trade secret, the circulation of trade secret is confined to a limited number of persons on a need-to-know basis. Trade secret also concern invention, manufacturing process, or customer needs. Okay, so that this kind of intangible assets and IP, okay, so long as this can fulfill the elements of the trade secret, then the company may grant the safe harbor C. Okay, finally, for safe harbor D, this means the company is granted safe harbor for information concerning the provision of liquidity support from the government exchange fund or a central bank. And the purpose of safe harbor D is to ward off the financial contamination. Okay, so that in just case, because of the provision of liquidity support reason, then this can enjoy exemption from safe harbor D. Okay, so that the company should ensure all the knowledge of information is restricted to those who need to have access to this. And the acceptance of the information should aware that the information is confidential nature. Okay, so that's the reason why the use of NDA is very important to protect confidentiality. And the company should also build up a duty of care to protect any inside information. If the information has not been confidential or there has been a leak, then this condition will not be fulfilled and any safe harbor will no longer apply. So that the safe harbor cannot be used again. And the company should disclose the inside information announcement as soon as reasonably practicable. In summary, the listed company should have some procedures, policy, and best practice on inside information disclosure. Okay, first of all, before we arrange any discussion on the proposed contract, or before we conduct any due diligence, please arrange the MOU, LOI, and NDA with the potential party. Then, during the DD exercise, please ensure that everything should be highly confidential. And the company should also prepare the business valuation and feasibility report. After subject to the satisfaction of the due diligence, both parties can commence negotiation and discussion for the terms of the sales and purchase agreements. Everyone should own a duty of care to maintain a high level of confidentiality who have the knowledge on the proposed transaction. And during the status of negotiation for the transaction, the company should keep track with the share price and trading volume movement, and also notes the external news and media. And finally, comply with the inside information provision under the SFO, including publish the inside information announcement and apply for trading halts. Okay, apart from inside information, you should also know some other listing rule requirements on loan transaction. The listed company, apart from banking company, under the banking orders, the company should have its own commercial business activities. However, in some cases, the company may also use this cash for loan borrowing, okay, in order to earn the interest income. Or the company may subscribe the bond or debentures, which is also a form of provision of financial assistance. Okay, so that according to Chapter 13 of the listing rule, please make sure that with the company provide the loan to the entity, please calculate the side test. Okay, that is, first of all, please take a look on notifiable transaction. Provision of financial assistance is a kind of notifiable transaction. Okay, so that the company should calculate the side test for the provision of financial assistance under Chapter 14 of the listing rule. Not only Chapter 13, please also refer to Chapter 13 of the listing rule, that is rule number 13.13. Okay, that is, where the company provide the advance to the entity, we apply excess ratio, which the result is more than 8%, or subsequent increase of 3% or more. Then the company must publish the information as soon as reasonably practicable. The information should be disclosed, include the detail of the balance, the nature of the event or transaction, giving rise to the amount, the debtor identity, interest rate, and repayment terms and collaterals. With the disclosure continue to exist at the income period end or annual year end, the information under the disclosure requirement shall be included in the income report and annual report respectively. Okay, so that not only announcement, please also disclose the advance to the entity at the company annual report and income report. Okay, apart from advance to the entity, where the financial assistance or guarantee given to the affiliate company in aggregate that is more than 8% under the excess ratio, then the company must publish the information as soon as practicable. And the information should be disclosed include analysis of the financial assistance given to, committed capital injection to, and guarantee given to the affiliate company. What are the interest rate, repayment method, maturity date, and securities at the terms of the loan agreements, the source of financing and funding for the committed capital injection, and the banking facility utilized by the affiliate company. So that according to the rule, financial assistance and guarantee to affiliate company should be viewed on a group basis, including there is a direct relationship or indirect relationship through the subsidiary and affiliate company. What is affiliate company? Okay, please refer to any company under the Hong Kong Financial Reporting Standard, which is recorded using the equity method of accounting in the entity financial statement. There are two examples. One is associate company, that is 30% or more. Another example is jointly controlled entity, that is 50% and 50%. Okay, as a result, affiliate company means any entity which the listed company hold 30% to 50% of the voting power at this general meeting. Same as advance to the entity, where the disclosure continues to exist at the income period end for annual financial year end. This interim report and annual report must include a combined balance sheet of the affiliate company as the latest practicable date. Now, let's take a look on another topic, that is Chapter 14 of the listing rule, that is low-tier forward transaction. Before we look at low-tier forward transaction, you should know all 6 types of transaction under listing rule. How to determine the type of transaction? That is, the company should calculate the side test. If the transaction is a low-tier forward transaction, then the company must complete and submit this checklist to the stock exchange. The purpose is that the announcement is to notify the shareholders regarding the low-tier forward transaction. And in case the transaction is sizable, like major transaction, then the company should obtain shareholder approval. Okay, this table is very important to understand all the side test result. Okay, including 5%, 25%, 75% for disposal, 100% for execution. Okay, so that there are 5 side test results. And please take a look, share transaction. That is, the consideration is settled by the new issue of shares. Okay, so that even though the ratio is less than 5%, the announcement is still required for share transaction. That is, using the new issue of shares as a consideration to settle the transaction. Discoverable means 5% or more, but less than 25%. Major include disposal and execution. Major disposal means less than 75%. Major execution means less than 100%. With more than 75% and 100% respectively, that is VSD and VSA. And because of the types of transaction, okay, there are also different compliance requirements for the listed company. Okay, one is notification to the stock exchange. All type of transaction require the stock exchange notify. In particular, the side test checklist must be submitted to the stock exchange before publication of the announcement. For VSA and VXD announcement, they must be cleared by the stock exchange. Okay, so that first of all, notify the stock exchange regarding the proposed notifiable transaction. Then the announcement is required for every type of transaction. And because major transaction or above require shareholder approval requirements, so that the circular must be published at the company website and the stock exchange website for shareholder information, and also include the notice of the general meeting. And also for execution, the company should also appoint the accountant to prepare the accounting report and put this accounting report at the circular. Okay, so that the side test is very crucial in notifiable transaction. Okay, so that the company must complete and submit the side test calculation in respect of the notifiable transaction. And not only notifiable transaction, in the next topic, we will take a look on complete and submit side test checklist for CT. More importantly, you should know all the formula on the side test. Okay, basically, this refers to apple, orange to orange. And for the numerator, this means please refer to the financial information of the company. For example, for asset ratio, please look at the consolidated total asset of the company. You can make reference to the latest annual report, interim report, and quarterly report, whichever is the latest one. Look at profit ratio and revenue ratio. Please refer to the annual account, okay, regarding the profit of the company, and also compare with the profit attributable to the asset being subject of the transaction. And for the consideration ratio, interestingly, the regulator applied market capitalization of the listed company, so that we should take a look on the sales and purchase agreement on the consideration. How and when equity capital ratio is applicable? Okay, that is, when the consideration is not settled in cash and using the new issue of shares as a consideration, then the equity capital ratio should also be calculated. Okay, so that's the reason why when the company has any transaction, please prepare and draft the side tetra list to reveal whether the transaction is NT or not. If the transaction is NT, apart from this agreement, please also draft the announcement and including the major terms of the SPA. After the discussion and negotiation is completed and the SPA has been finalized, then please agree with the party the date of the execution of the SPA. Before we sign the SPA, please provide a summary of the transaction to the board of directors for consideration and approval. Then at the board meeting, to approve the terms of the SPA and authorize any director to execute the SPA. At the day of signing the SPA, the company should submit the signed tetra list to the stock exchange before publishing the announcement. If the transaction is VSA or VSD, draft announcement should be submitted to the stock exchange for vesting first, and the company may apply for trading halt until the company is able to publish the VSA or VSD announcement. Then the trade of share can be resumed. Finally, look at CT. Okay, CT are another common topic in the examination. You should know what are CT. CT means transaction with the connected person. Not only connected person, CT also include specified category of transaction with the third party that may confer benefit to the connected person for their interest in the entity. And CT include both the capital and revenue nature transaction. CT may be one-off transaction or continuing transaction, that is CCT. In case the transaction is CT, let's take a look on the compound requirement, in particular, the exemption from the listing rule. Basically, for all type of CT, even though the transaction is fully exempted from the CT rule, anyway, written agreement must be signed with the connected person. Okay, so that even though the CT is fully exempted, written agreement is still required for entering the transaction with the connected person. Because of fully exemption, so that no need to public announcement, no any reporting, no need to hold the shareholder approval meeting, and any reporting for CCT. There are some other exemptions that is only require the publication of the announcement. Okay, including written agreement, announcement, at the annual report, please also make the disclosure for the CT during the years. Just in case that is the CCT, then please also compile with the annual compile, including the appointment of the auditors to review the CCT and let the INED to confirm the CCT. Anyway, there is no independent shareholder approval requirements. If there is no exemption, then the listed company must conduct everything: written agreement, announcement, annual reporting, independent shareholder approval, and for CCT, please also review on an annual basis. More importantly, there are some exemptions you must know, and the minimum transactions is the most important one. In many listed companies, they rely on the minimum transaction to enjoy exemption on CT disclosure. The minimum exemption apply to the CT, apart from the issue of new securities, conduct on normal commercial term or betas. and all the side tax ratio excluding profit tax. That is, in order to enjoy full exemption, all the side tax results should be less than 0.1%. Or, with the connected person is at the subsidiary level, less than 1%, and the transaction is a CT only. Or 5%, less than 5%, and the total consideration is Hong Kong dollar $3 million. Okay, so that the CT can enjoy full exemption. And also, how about partial exemption? Okay, that is enjoy exemption from circular, appointment of IFA, and independent shareholder approval. That is, the side tax result should be less than 5%. Or the side tax result is less than 35%, and the total consideration is less than 10 million Hong Kong dollar. Okay, so that for the CT, there are some requirements which the listed company must comply with. First of all, listed company group must enter into a written agreement for the CT. After execution of the agreement, the company should publish the CT announcement as soon as practicable after the terms has been agreed. If there is the independent shareholder approval requirement, then the listed company must send the circular to these shareholders. CT must be conditional on the shareholder approval at the general meeting. Any shareholder who have the material interest must abstain from voting. The exchange may accept written shareholder approval with no shareholder is abstaining from voting and from more than 50% shareholders or closely aligned group of shareholders. Apart from announcement, the company must also conduct annual reporting. The company must disclose this CT during the financial years in this annual report. Because of the shareholder approval requirements, the listed company must have two independent parties for CT. One is IBC, Independent Board Committees, which must consist only the INED, who has no material interest in the transaction. And the role of the IBC is to advise the shareholders whether the terms of the CT are fair and reasonable, whether the CT is on normal commercial terms or matters, and in the ordinary and usual course of business, whether the CT is in the interest of the company and this shareholder as a whole, and how to roll on the CT. And also, in order to give the advice to the independent shareholder by the IBC, the company must appoint the IFA, which is accessible to the stock exchange, to make recommendation to the IBC and independent shareholders. Therefore, the circular must obtain the IFA letter, including the opinion and recommendation, the reason for this opinion, the key assumption made, the factor this has taken into consideration, informing the opinions, and the shareholder should vote in favor of the transaction. Okay, so that's the reason why for CT which requires shareholder approval. Please bear in mind the importance of IBC and the IFA. And you should know who are connected persons, and there are 6 types of connected persons, including the directors, chief executive, or substantial shareholders. That is 10% or more of the voting power at the general meeting. Or any person who was a director with the last 12 months, that is the former directors. For the PLC issuers, that is the supervisor. And not only them, any associates of the above person are also connected person. Connected subsidiary is also the connected person or deemed connected person. Okay, so that you should know all the type of the connected person. Finally, let's take a look on CCT. Okay, because CT can be one-off transaction or continuing transaction. CCT, okay, are the continuing transactions involving the provision of goods or services or provide financial assistance, which are carried out on a continuing or recurring basis and expected to extend over a period of time. They are usually the transaction in the ordinary and usual course of business. And CCT require any review by the INED and the auditor. Some good examples of CCT include the sharing of costs incurred by the party, unit price for good or service provided, annual rental for leasing a properties, or management fee based on a percentage of the total construction cost, for example. Okay, so that you should know all the exemptions under listing rule. Okay, how to enjoy full exemption for CT. Okay, as I mentioned before, the managed transaction is the most important one. So you should bear in mind all the financial figure here in this PowerPoint to understand the managed transaction. Okay, and also provide financial assistance to or from the connected person. Issue of new security to the connected person. Dealing in the security on the stock exchange. Repurchase of security. Director service contract and insurance. Buying or selling consumer goods or services. Sharing of administrative services. Transaction with associate or passive investors. And transaction with CT at the subsidiary level. In conclusion, there are some tips on the CT compliance. Okay, first of all, the company must prepare and update and review the list of connected persons. In case of any CT, check for any exemption under the listing rule. Please also hold a board meeting, okay, and general meeting to approve the transaction. The connected person, for example, director or shareholder, must declare their interest and sustain from voting. And disclose the CCT at the annual report. Disclose the related party transaction under the Hong Kong SRS at the financial report. And specify whether the transaction is a CT and whether this has complied with the CT requirements. If the shareholder approval is required, the company should establish the IBC and appoint the IFA. If the transaction is CCT, the company should appoint the auditor to review the CCT, and the INED should also review the CCT. Finally, even though the CT has enjoyed full exemption from the listing rule, the transaction must still be approved by the board of directors, including INED. Now, you have a very good ideas on Chapter 13, 14, and 14A of the listing rule. In order to be more practical and understand the focus of the examination, now let's take a look on some past exam papers in Section E. First of all, let's take a look on 2023 June exam paper. Before we look at the scenario from the question, let's us to review the question requirements. I also highlight and underline the keywords. When you present the answer at the examination, please use the highlighted part as the headline and make sure that your answer must be relevant to the question requirements, which include 13 marks and 12 marks respectively. For A, general obligation of the listed company to disclose inside information under the SFO and the listing rule. So that the first part is very straightforward, asking about what are inside information under the SFO and the listing rule, and also the obligation for disclosure. For the B, this question is far more practical because what proper action the company should take, including draft the relevant announcement. There are two announcements. One is financial position, and the second one is market rumor. Okay, and also some reminder to the candidate. With the announcement is necessary, only the content will be examined. Okay, there is no need to say about the disclaimer used by the stock exchange or any format of the announcement. That is the gentle reminder to the candidate. Okay, this seems that the question is very straightforward. In order to solve the problem, let's take a look on the scenario of the question. The company is a Hong Kong
and doing business in overseas in health and household product. The type of company is a limited company in Hong Kong, and the shares are listed on the stock exchange. And not only Hong Kong Stock Exchange, the company has ADR listed on the Nasdaq stock market in the US. Financial year end is December 31, and the audit financial statement for the group, for the year end 2022 December 31, are scheduled to be published on 2023 March 38. That is before the deadline of March 31. And in last year's August, the company reported this unaudited interim result that this revenue and net profit for the first 6 months 2022 were slightly better than the corresponding periods of the last years. However, in this year, February 1, based on the preliminary review of the unaudited management account available to the board, this was also that the board was experiencing a downturn in this business and expected to record a negative amount in this net profit, representing a decrease of approximately 150% when compared with the corresponding periods of the previous year. The examiner also provides you the gentle reminder every information in the paragraph is related to financial position that is matching the question requirements. 1 NED asked whether the financial position was a matter that should be made known to the market immediately, or this should be kept confidential pending the release of the annual result on March 28. On March 1st, there is a market rumor saying that certain shareholders were planning to dispose their shares on the market. As a result, there was material decrease in the company market price and an unusual increase in the trading of these shares. The NED is of the opinion that the market rumor was false market information and no action should be taken in response to this market rumor. Okay, this seems that the question is really practical for the listed company in terms of financial position and how to deal with the market rumor. Okay, now let's take a look on the Excel report. Unfortunately, this question was not popular by candidates. Only 40% of the candidates select this question in section B. And section part A is very straightforward, asks you about the disclosure of inside information. And part B requires you to prepare the announcement on inside information. Interestingly, even though only 40% of the candidates select this question was the second best performed question in this section. Okay, so some candidate has not revised part of the syllabus just because some of the candidates fail to understand what are inside information and how to disclose inside information. And part B was really poorly answered just because the question is really practical. There are two issues according to the question requirements. I underline and highlight the keywords here. One is financial position, and other one is market rumor. However, some students mix up and view this as a single case, just because two separate announcements should be made. One is for financial position of the company in February, and another announcement is deal with the market rumor in March. Okay, so that student performance is not quite good on that question. Okay, anyway, some strategy to answer the question, including that based on everything you highlight and underline, and based on all of this underline heading, to present the information as required by the examiner. Okay, first of all, for the first part, you must define what is inside information. Okay, first of all, SFO, that is the legal obligation of the listed company to disclose the inside information as soon as reasonably practicable. after the inside information has come to their knowledge, and give the SFC the responsibility for enforcing the obligation. Okay, so that at the company, the director and officer may have the knowledge of the inside information. Okay, so that if there is any inside information, the company must publish the announcement as soon as reasonably practicable. When the stock exchange become aware of any breach of the inside information provision, the exchange will refer the case to the SFC. The stock exchange will not itself take disciplinary action under listing rule, unless the SFC consider it is not appropriate to pursue the matter under the SFO, and the stock exchange consider action under the listing rule for a possible breach of the listing rule appropriate. Okay, so you can see the consequence for the breach of the SFO. More importantly, what is inside information? Please call section 307A of the SFO. Inside information must be specific information that is about the listed company, the shareholder or officer of the listed company, or the listed securities, that is the share capital, or any derivative of the listed company. Secondly, information is not generally known to those who are accountants or likely to deal with the listed company securities. With known, the information could be likely to have a material effect on the price of the listed securities of the listed company or their derivative. If there is any inside information, let's say in this case, financial information and also market rumor, then according to section 307B of the SFO, the company must disclose inside information to the public as soon as reasonably practicable after any inside information has come to this knowledge or to the knowledge of the officer of the listed company. If there is no knowledge, there is no need to disclose. However, if there is the knowledge or ought to have the knowledge by this director and officer, then the company must comply with the SFO inside information disclosure. SFO also provides a definition of the officer, which is a very broad definition. Officer include director, manager, company secretary, or any other person in the senior management. In inside information disclosure, manager denote a person who, under the immediate authority of the board, is charged with the management responsibility affecting the whole or substantial part of the listed company. According to the listing rule, that is rule number 13.09, not only SFO, inside information must be disclosed by way of an announcement on the website of the stock exchange and the listed company. Publication of inside information on the stock exchange website fulfill the requirements of the SFO, which provide for equal, timely, and effective access by the public to the information disclosed. Since the company, their share not only listed in Hong Kong, the company also issue ADR in Nasdaq stock market. Since the company has share listed on more than one stock exchange, inside information disclosed to the public in Hong Kong should be at the same time released to the overseas market. If the inside information is released to an overseas market, while the Hong Kong market is closed because of time zone difference, the listed company should issue the announcement in Hong Kong before the Hong Kong market open for trading. Because the company ADR are listed on the Nasdaq stock exchange, the company should publish the inside information announcement in both the Hong Kong and the US market. Apart from disclosure requirements, please also take a look at safe harbor under section 307D of the SFO. which provide the safe harbor that permit a company to not disclose or to delay disclosing inside information. There are 4 safe harbor. You must memorize every safe harbor. One is safe harbor A, when the disclosure is prohibited under the Hong Kong court order or any Hong Kong statute. Okay, safe harbor B is the most common and popular one. That is when the information relates to an incomplete proposal or negotiation. Safe harbor C, where the information is a trade secret. There is no legal definition on the trade secret. The inside information provision provided that the trade secret refers to any proprietary information owned by the listed company. Finally, safe harbor D, that is when the information concerns the provision of liquidity support from the exchange fund or the central government or the institution that perform the function of a central bank to the listed company or member of this group. The safe harbor are available only with the listed company take reasonable precaution for preserving the confidentiality of the inside information. And the confidentiality of the information is preserved. If the confidentiality is low or the information is listed, the safe harbor will cease to be available, and the listed company must disclose the inside information as soon as practicable. As a result, the company must have effective system and procedures to ensure that any material information that comes to the knowledge of this officer is promptly identified and escalated to the board to determine whether this needs to be disclosed as soon as reasonably practicable. Therefore, the listed company must ensure that information is kept strictly confidential until this is publicly disclosed. Since the company is a Hong Kong listed company, the company should comply with both the SFO and the listing rule requirements. In terms of inside information, to ensure confidentiality, the company should arrange the non-disclosure agreement for all the parties. The company should have a good risk management and internal control system to ensure that confidentiality can be maintained. As a result, when provide any document relating to inside information during the due diligence process, every document should be marked with highly confidential, which can build up a duty of care to protect any confidential information. Otherwise, if the information is listed to others, this may trigger the unusual swings in share price and trade volume. As a result, the confidentiality under safe harbor cannot be used. The listed company must disclose the inside information as soon as practicable. Okay, so that confidentiality is the golden rule for the listed company how to protect inside information. And not only the hard copy, the company should also strengthen this IT security system to avoid any hackers, to protect any soft copy of the inside information. And also, anyone who has the knowledge of the inside information must sustain from dealing with the company securities. Otherwise, this may be a civil and criminal offense for insider trading under the SFO. Okay, so that the company should bear in mind in case of any inside information. Okay, the directors, officer, and employee must not deal with any company securities. If necessary, the company should send out the reminders to everyone. Okay, during the time of inside information, they are restricted from dealing with the company securities. Okay, now let's take a look on part B, which the answer is really practical, covering financial position and also the market rumor. Okay, first of all, you can see financial position is one of the headlines. Okay, first of all, according to listing rule, when the company believes that this is likely to be a false market in these listed securities, the listed company should, as soon as practicable, after consultation with the stock exchange, allows the information to avoid a false market. When the company becomes aware that this financial result may be significantly worse than the generally accepted market expectation, the company should publish the profit warning announcement to warn the investor the likely impact. The profit warning announcement must be public as soon as possible when the board has the knowledge the company results are substantially different from the market expectation. The earlier date of which in this case could be February 1st, as opposed to the day of the publication of the annual result announcement, that is March 28th. The information contained in the profit warning announcement must be complete and accurate in all material respects, and not be misleading or deceptive, whether by omission or otherwise. So that, first of all, that is the sample. The company expects to record a negative amount in net profit, representing a decrease of 150% compared with the corresponding periods of the last year. Interestingly, reduction in net profit by more than 100% is actually a net loss. In this case, to state that there is a negative amount in net profit, decrease in net profit does not help investors understand the situation, and in extreme circumstances would potentially be misleading. This is very interesting that with the decrease is more than 100%, this must be a net loss, so that at the announcement, with the company adopt the word like net profit, that is really misleading, which violate the SFO requirements. This could be clear and more accurate to say that, for example, the company is expected to record a net loss of approximately blah, blah, blah. For example, you can assume any amount which is more meaningful to the shareholder and investor. That is really the net loss instead of deduction in net profit. Then, how to prepare the announcement? Okay, first of all, okay, look at the SFO and the listing rule. Okay, that is according to rule number 13.09 of the listing rule, and inside information provision and SFO, that is the introduction of the announcement. Then the second paragraph, the directors wish to inform the shareholder and potential investor that based on the preliminary review of the unaudited consolidated management account for the year end 2022, currently available to the board, the group is expected to record a net loss of approximately blah, blah, blah for 2022, compared with a net profit in the corresponding periods of the previous year. This means that last year, the company recorded a net profit. Unfortunately, this year, the company recorded a net loss. The company is in the process of finalizing the group audit consolidated financial statement. This announcement is made based on the preliminary review of the unaudited management account currently available, which are subject to finalization and possible adjustment upon review and audit by the auditor or audit committees. Further detail of the financial result will be disclosed in the annual result announcement, which is expected to be public on March 28th. Will the company fail to publish the profit warning announcement, this could be the breach of the listing rule. How about the second part, market rumor? How to deal with the market rumor? Every day, there are many financial press and media reporting the company. This means that the company needs to respond every market speculation, rumor, or analytic report. Again, no. Unless there is a material market reaction to a rumor, including that it is likely to have a material effect on the share price. Okay, so that from time to time, there are many financial press and media talking about the listed company. The listed company is not obligated to respond to any market and media speculation or any analyst report or any market rumor, unless there is the unusual movement in share price and trading volume. If there is any material market reaction to the market rumor, the announcement must be public as soon as practicable, that is on the day of March 1st. Under the rule, the exchange may make the inquiry concerning the unusual movement in share price and trading volume. The company must respond promptly to the exchange, provide any information this may have that is relevant to the unusual movement of the share price and trading volume, or confirm to the stock exchange that this is not aware of any reason for just unusual movement. At the request of the stock exchange, with not, please also publish the voluntary announcement. The company should publish the announcement as soon as practicable. Then how to prepare the announcement? Okay, the suggested word is that the board notes an unusual decrease in the price and increase in trading volume on March 1st. After making all inquiry about the company, as is reasonable in the circumstances, the board confirmed that it is not aware of any reason for just a decrease in the price or an increase in trading volume of the shares, or of any information that must be public to avoid a false market in the company's securities, or any inside information discoverable under the SFO. The board also confirmed that the group business operation remain normal, and there is no material adverse change to the business operation or financial position of the group. Finally, the warning. Shareholders of the company and potential investors are advised to exercise caution when dealing in the security of the company. If the company fails to issue the announcement regarding unusual price movement and an increase in trading volume, that is the breach of the listing rule. Okay, so that's the reason why you should read the question carefully, and based on the question requirements, apply the scenario to your answer, and then provide some recommendation on the compound of the listing rule as well as the SFO. Okay, so that for the first part, that is straightforward. Ask you about the general idea of the SFO, and the second part, please practically apply information disclosure on the issue of financial position, that is profit warning and profit alert, as well as how to deal with the market rumor. Now, let's take a look on the exam paper 2022 November. Okay, this question asks you about, again, some question on the provision of loan to others. What is the listing rule comprise, including chapter 13, 14, and 14A, for example. Okay, loan transaction is very common for the listed company, so that you should have very good ideas on that. Before we look at the scenario, please take a look on the question requirements. Where does the company and this director breach the listing rule in relation to each batch of loan provided by KSL to GL? Okay, before we look at the scenario, at least you should have ideas whether the company is able to comply with the listing rule for each batch of loan. Okay, you can see the mark is very significant. 17 mark. This means that you must write at least 3 pages for 17 mark answers. And based on A, what are the actions you can recommend to Daniel? 8 mark. Okay, so that you need to write around, let's say, 1.5 pages. Now, look at the type of company. Normally, this is the Hong Kong company and the shares are listed on the stock exchange. The subsidiary, KXL, is the wholly owned subsidiary of the listed company. On July 4, John, the directors of KXL, reached a mutual understanding with GL. Okay, which KSL, that is the subsidiary, provide loan to GL, and GL pay the interest equivalent to 4% of the loan amount per annum to KSL. As the terms of the loan agreement has not yet been determined, no written loan agreement was entered into between KSL and GL. GL is a wholly owned subsidiary of GIHL, which GIHL holds 6% in the listed company. Other than that, there is no any relationship between GIHL or GL with TLD or KXL. Okay, this means that the scenario is quite complicated. So I recommend you, dear examination, you can draft the organizational chart to avoid any misunderstanding of this shareholding. Okay, and there are 4 loans provided by KSL to GL. Okay, you can see the respective day, the loan amount, and more importantly, according to the listing rule, the highest percentage ratio is assets ratio. Okay, so that no need to calculate the side test because the question provides the result of the side test result. And assets result is the highest percentage ratio. And more importantly, when you're talking about advance to the entity, please also look at the assets ratio. Okay, between the date of 4 batch of loan, July 7, that is after this, the first batch of loan, GIHL acquired additional 4% in the listed company. This means that 6% plus 4%. So that GIHL hold 10% in the listed company. What is the implication here? This means that GIHL on July 7 has become a substantial shareholder of KPDL according to the listing rule. Because according to the listing rule, substantial shareholder means hold 10% or more of the voting share of the listed company. And next day, John, that is the subsidiary director, also appointed as the executive director of the listed company. Okay, and then after 4 batch of loan, okay, Daniel, the chairman, find that no written agreement for the above 4 batch of loan. And only John, that is the only director of the listed company, know everything about the loan and did not appear to be aware of any action he should have taken to procure the listed company to comply with the listing rule or the implication for the above loan. Okay, so that this case was very, very interesting but complicated. Now let's take a look on the comment from the examiner, which the comment is very similar to the previous one when you are talking about the listed company. The question was about the provision of loan by wholly owned subsidiary to the connected person. Some candidates, they do not have sufficient knowledge. Okay, as I mentioned before at the opening. Chapter 13, 14, and 14A of the listing rule, and did not discuss clearly whether the company or this director breached any of the listing rule. The second part of the question was also poorly answered. Certain candidates appear not to realize that they were required to recommend some practical remedy action to the company in the scenario in order to avoid the breach of the listing rule in the future. The performance was very, very extreme, similar to the previous question. With the candidates who were familiar with Chapter 13, 14, and 14A, they will have a very good answer and provide a very comprehensive analysis of the scenario in the question. So I can say that part of the student, they get A on that question. And some of the students, because they are not familiar with the listing rule, they fail, okay, including fail B or fail C in that question. Okay, so please make sure that before you attend any answer on the listing rule, you must familiar with the listing rule first. Otherwise, please avoid. Okay, you can select some question regarding company audit instead of the listing rule. And anyway, Chapter 13, 14, and 14A are the hit topic in Section B long question. So that I recommend you must familiar with all of these topics. Now, let's take a look how to give the answer on 17 mark. Okay, first of all, before we provide the breakdown, okay, because there are 4 batch of loan, so that every batch of loan can be regarded as a headline. Okay, and based on the final result of the asset ratio, okay, we also calculate the aggregate amount of the assets ratio so that you can see the highlight portion here. I recommend you when you present the answer, please also prepare something like about this shareholding table. Okay, how about the first loan? Okay, that is $20 million loan on July 5. First of all, you need to provide the relationship between the company. KXL is a wholly owned subsidiary of the listed company. The provision of loan by KXL to GL constitute a low TFRO transaction, so that we need to calculate the side test. Since the question provides the side test result, that is the SF ratio, which is the highest percentage ratio among all the ratio, which is 2%. Since the percentage ratio is not 5% or more, KD, the listed company, is not subject to any disclosure requirements. Apart from Chapter 14, how about 14A? It is a connected transaction. Okay, the contracting party owns 6% only in the listed company, so that it is not a connected person. The provision of loan by KHL to GL, which is a wholly owned subsidiary of the listed company, does not constitute a connected transaction. Therefore, the listed company is not subject to disclosure requirements under Chapter 14A. The conclusion is that the listed company and this director has not breached the listing rule. Okay, so that the first batch of loan is very simple and straightforward. But how about the second batch? Okay, you can see the exact ratio in aggregate is 5%. Your analysis should include, because on July 7th, GIHL has acquired additional of 4%. Okay, so that 6% plus 4% means own 10% in the listed company. And make GIHL is a substantial shareholder of the listed company. And according to the listing rule, substantial shareholder is a connected person. So that GIHL is the connected person of the listed company by virtue of being a substantial shareholder of the listed company. And GL, as a wholly owned subsidiary of GIHL, is a connected person of the listed company by virtue of being an associate of a substantial shareholders of the listed company. And what are the type of transaction for CT? Money lending is financial assistance. Okay, that is the provision of financial assistance. Any transaction between a listed company group, that is the listed company and KSL, that is subsidiary, and a connected person is a connected transaction. At the provision of loan by KSL to GL constitute a connected transaction, then the listed company must publish the announcement setting out the detail of the loan on July 18. The listing rule specifies that a listed company must enter into a written agreement with this connected person. However, neither the listed company nor subsidiary enter into any written agreement with GL in relation to the loan provided by KHL to GL. The listed company should aggregate a series of transactions and treat them as if they were one transaction, if they are all completed within a 12-month period. After aggregation, the exact ratio, that is the highest percentage ratio among all the ratio, is 5%. That is 2 plus 3%, which is a disclosable transaction. Therefore, the company should publish the announcement. As a result, the second batch of the loan trigger both the Chapter 14 and Chapter 14A disclosure requirements. And the listed company with the Chapter 14 and 14A, because this did not publish the announcement on the second batch of the loan, and also breach the listing rule on CT because there is no written agreement which was entered into. How about the first loan? That is the side test result. SF ratio is now 9%. After aggregation for the amount of loan, why the SF ratio is 9%? Because 2% plus 3% plus 4% is 9%. According to Chapter 13, now look at Chapter 13, where the advantage entity exceeds 8% under the SF ratio, the company must publish the announcement as soon as reasonably practicable. So that for the first batch of loan, this triggers Chapter 13 of the listing rule. As a result, the company breached the Chapter 13, and this did not publish any announcement on August 1st. How about the final loan? The asset ratio is 7%. Okay, however, Chapter 13 specifies that where the relevant advance to the entity increase, and the amount of the increase since this period of disclosure is 3% or more under the asset ratio, the listed company must publish the announcement as soon as reasonably practicable. Similar to the first part of the loan, the listed company breached the Chapter 13 because the company did not publish any announcement on September 1st. Okay, so that you can see, you can refer to the loan table and use every batch of the loan as a heading to provide the analysis on Chapter 13, 14, and 14A of the listing rule. How about the directors? Okay, when John was appointed as a director, he signed the director declaration. That is Form B. As I mentioned in the previous topic, Form B has been abolished since 2023 December 31, just because director undertaking has been included at the listing rule. Therefore, you should revise some language here. That is, according to the listing rule on the director undertaking, the director should comply with the listing rule to the best of his ability and should use his best entities to procure the company comply with the listing rule. John was appointed on July 8 and made clear that he was not aware that JIHL has acquired the additional of 4% of the Eagles shares and become a substantial shareholder of the listed company before one day. However, John was aware of the above loan but failed to take any action to procure the company to comply with the listing rule. John therefore breached the director undertaking according to the listing rule requirements. How about other directors, not only John? Remember, the listing rule director liability cover individual and collective liability, so that the full board may also be responsible for any breach of the listing rule. Although the other directors were not aware of the above loan, the board of directors is collectively responsible for the listed company management and operation. The director must collectively and individually fulfill their fiduciary duty and their duty of care, skill, and diligence to a standard at least commensurate with the standard established by Hong Kong law. Therefore, all directors do not have any excuse to absolve themselves from their responsibility or from applying the required level of skill, care, and diligence. Okay, so that you can see the answer is very, very comprehensive. One of the conditions is that you must really understand the question requirements, and you should identify all the key issues from the middle side of the scenario. In particular, you need to prepare the summary table on the final result of the asset ratio, and then use Chapter 13, 14, and 14A to evaluate the whole question. Now look at Part B. What are the remedy actions which we can recommend to the chairman? Because of the breach of the listing rule, the listed company is recommended to report the inadvertent omission to the stock exchange and propose to the stock exchange the remedy action to correct the inadvertent omission. The listing division is responsible for conducting investigation into any breach. An investigation will normally involve inviting written submission from the listed company. The director of the listed company should cooperate with the listing division and explain what has happened, as well as provide the listing division with any information that the listing division may reasonably require. Meeting may also be conducted in appropriate case. KSL should finalize the terms and enter into a written loan agreement with GL as soon as practicable. The term of and the execution of the loan agreement should be ratified by the board of directors of listed company and of KSL. Otherwise, the loan will be considered void and invalid. the listed company should publish the announcement to disclose the detail of the loan as soon as practicable. Because the compliance covers Chapter 13, 14, and 14A of the listing rule, and disclose the omission in the annual report and interim report. This appears that the listed company suffer from the following deficiency, so that we can recommend some CG solution, that is corporate governance, so that remedial action are recommended to the listed company and the board. Okay, first of all, we understand that CG code focus on internal control. There are many deficiencies in the internal control system. Although the listed company has the internal audit function to review the group internal control twice a year, as required by Appendix C1 of the listing rule, this internal control department failed to identify the above internal control deficiency. There are some recommended remedial action, ensuring that there is a clear internal control framework in the company. And the board should also invite the internal control managers to have a more frequent regular review of this risk management and internal control system. For example, a quarterly review. The listed company has no written procedures to report any potential notifiable and connected transaction. There is no internal procedures to approve the transaction and also loan. Remedial action recommended include install and upkeep the system to monitor transactions in subsidiary, proper keeping of the book and record, ensure that the relevant transactions are disclosed in a timely manner. How about the employee? The staff of KSL are unfamiliar with the internal control procedures, reporting procedure in relation to notifiable transaction and connected transaction, and all the listing rule requirements. So that there are some recommend remedial action. First of all, ensure that all the relevant staff are familiar with the internal control procedure, reporting procedure, and also notifiable and connected transaction, and all the requirements under the listing rule. Employee training and regular training should be provided. Okay, finally, director training. Okay, because the director of listed company are unfamiliar with the listing rule and their obligation. So that your recommend remedial action should include director training, which the company secretary should provide regular training to the board and ensure that the director attend the relevant training section and they obtain the sound advice and their understanding of their director duty, obligation, and responsibility. The second part is very straightforward, just provide some CG point of view to ensure the company can comply with the listing rule requirements. And of course, the first part is the more important one because you may identify some non-compliant issue, okay, for the provision of loan to others. Okay, and this is also important that when you're talking about provide loan from the listed company, please alert the Chapter 13, Chapter 14, and Chapter 14A. So that's the reason why I mentioned before. One question may cover all of these three topics into one question. And in the listed company, this is very common. The same transaction will need to comply with Chapter 13, notifiable transaction, and also connected transaction. So whenever the company enter into any transaction, first of all, side test. Look at the size of the transaction. And the second criteria is who are the contracting party. Please check with the list of connected person whether the contracting party is a connected person or not. Something about like this question. Okay, the disclosure cover 3 chapters in the listing rule just because the side test require disclosable transaction. The contracting party is a substantial shareholder, that is a connected person. And also because this relates to advance to the entity because the company is not a banking company. Okay, so that please calculate the asset ratio to determine the disclosure requirements under Chapter 13 of the listing rule. Okay, now let's continue to look at another question on 221 November. Okay, before we look at the scenario, okay, including the organizational chart, and also 4 types of transaction with the listed company. Then let's take a look on the question requirements. Explain what is an affiliate company and analyze and identify the affiliate company of the listed company in the about diagram. Okay, so that you need to advise A, B, C, D, and E are associated company or not, and discuss why and provide the reason. And analyze whether the company will trigger a disclosure obligation under Chapter 13 of the listing rule. With A, execute a transaction from 6 to 9 December. That is 4 types of transaction. Okay, the mark is 15 mark. This means that you must write around, let's say, 2.5 pages or 3 pages for 15 mark question. And also, based on the analysis in A, what are the disclosure requirements? And also, checklist for compliance procedure, so that you need to write around 2 pages for 10 mark question. Okay, so that this means that the question is very straightforward, but more importantly, you should take a look on the whole scenario of the question. The company is a Cayman Island, and the shares are listed on the stock exchange. The company is a food and battery company in China, Asia, and Europe as well. The company decided to diversify this business and form the firm company, and certain of which are jointly owned with this business partner, who are not the connected person under the Chapter 14A. Okay, so that you can see the shareholding and also the table here. The listed company directly hold 100% in A, and there are 4 entities under A, including 21% own B, 50% own C, 100% own D, and 30% own E. And because of additional funds to finance their operation, the foreign funding will be provided. Okay, including that, first of all, okay, looking at this company, B, this will secure a $100 million loan from the bank, and A will act as a guarantor, provide a guarantee to the bank in proportion to this equity interest in B. Okay, so that A needs to provide the guarantee for this 100 million loan, and the other party, that is the 79% shareholders, also bear the respective guarantee. Okay, for C, okay, you can see C will secure an $80 million loan from a bank, and A will act as a guarantor, provide a guarantee to the bank in proportion to this equity interest in C. Okay, so that you can see that is 50% by the A company, and also another 50% by another party. And another loan, D, that is a loan agreement between A and D, which the A will lend $100 million to D, and D will pay the annual interest equal to 2% of the loan amount to A. Okay, please note that that is the wholly owned subsidiary. And E will secure a 90% loan from the bank, and A will act as a guarantor, providing a guarantee to the bank in proportion to this equity interest. That is 30% by A and another 70% by another third party. More importantly, look at the financial information of the listed company. Non-current asset is 650. Current asset is 350. So that total asset is 1,000 million Hong Kong dollar. Okay, why this information is very important? Needless to say, we need to calculate the excess ratio. Okay, so that this information is very important to evaluate the disclosure requirement for the above 4 transactions. Okay, before we look at the subject answer, please take a look on the examiner report. This question asks you about affiliate company and the financial assistance given to the affiliate company of the listed company. And the question was not well answered. Only high mark will award to those candidates who demonstrate a good understanding of the meaning of the affiliate company under the listing rule. In other words, if you are familiar with the listing rule, this question may not be difficult to you. But if you are not familiar with the listing rule, including you have no knowledge on the definition of the affiliate company, the candidate were unable to gain the mark on that question. And this is a very good reminder, as highlighted. That is not a good examination technique for candidates to choose a question on the topic which they do not understand or are totally unfamiliar with, so that students fail in the examination. Okay, I think this Excel report is very important. As I mentioned before, whenever section B asks you about chapter 13, 14, or 14A, if you are not familiar with the listing rule, please avoid the question, because the question is really, really practical, as I mentioned in the past exam paper. On the other hand, if you have a very good knowledge on the listing rule, you may see that the question is not difficult, so long as you are able to do the side test calculation. Okay, so that's the reason why you should bring your calculator for side test calculation at the examination hall. Now, let's take a look on the subjective answer. Okay, first of all, what is the meaning of affiliate company? Okay, please refer to Hong Kong Financial Reporting Standard. Okay, this means that is record using this equity method of accounting in an entity financial statement. And because of the Hong Kong FRS definition, affiliate company also include associate company and jointly controlled entity. Therefore, the affiliate company of the listed company means the listed company hold 30% to 50% of the voting power of this general meeting. Okay, so that first of all, please prepare the table to list out all the company here and also list out the voting right interest of that company. Okay, you can see some analysis to evaluate whether each of them are affiliate company or not. First of all, how about A? The answer is no, because A is a wholly owned subsidiary of the listed company. How about B? That is 20%, 31%. That is within 20% to 50%. Needed to say B is the associate company of the listed company. How about C? That is 50%. Okay, 50% means that is the jointly controlled entity within 20% to 50%. How about D? Again, 100%, just because D is a subsidiary, okay, of the listed company and also A. How about E? 30%, similar to B, that is the associate company because of holding is 30%. Okay, this table is very important because this may affect your suggestion and answer on the whole question. According to the listing rule, financial assistance and guarantee to affiliate companies should be viewed on a group basis, including those avoiding from a direct relationship or indirectly through the subsidiary and affiliate company. Therefore, the financial assistance and guarantee provided by A during the 4 days should be viewed on a group basis. And according to the rule, where the financial assistance to affiliate company and guarantee given for the facility granted to the affiliate company in aggregate exceeds 8% under the asset ratio, the listed company must allow the details. Okay, so that please provide some analysis for every day when the company provide a loan or guarantee should the announcement is required under Chapter 13 of the listing rule. Okay, first of all, how about the first loan? The loan amount is 100 million loan from the bank, and A will act as a guarantor, provide a guarantee to the bank in proportion to this equity interest in B. Okay, so that when we calculate the amount guaranteed by the listed company, this means $100 million multiple 31% because only hold 20%, only 1% of associate company. Okay, and asset ratio means the total assets of the listed company, so that we have the result of 2.1%. How about the second loan? C will secure an 18 million loan from the bank. A will act as a guarantor, provide a guarantee to the bank in proportion to this equity interest. Again, what is the amount guaranteed? Okay, the loan is $18 million and the shareholding is 50%, so that the guarantee amount is $40 million. Okay, over the total assets, so that 4%. Because the listing rule requires the amount of guarantee to the affiliate company is viewed on a group basis. The guarantee on these 2 days are 2.1% plus 4%, that is 6.1% in aggregate. Since the assets ratio is not 8% or more, no disclosure obligation is triggered. How about December 8? The owner agreement will be entered between A and D, which A will lend $100 million to D and D will pay the annual interest. We know that D is wholly owned by the listed company. So that's the reason why D is a subsidiary, not the affiliate company, which is not applicable to the wholly owned subsidiary. Therefore, the guarantee provided to this affiliate company still remain at 6.1%, and no disclosure obligation is triggered. How about the final loan? E will secure a $90 million loan from the bank. A will act as a guarantor, providing a guarantee to the bank in proportion to this equity interest in D. Okay, so that the amount guaranteed by the listed company is $90 million, multiple 30%, okay, which is 27%. And after we calculate the assets ratio, that is 2.7%. As I mentioned before, we get the analysis that B, C, and E are associated company, okay, affiliate company under the listing rule. So that's the reason why 2.1% plus 4% plus 2.7% is 8.8%, which is 8% or more. Therefore, the disclosure obligation is triggered. Okay, so that's the reason why you must bring the calculator for calculation of the side test, because as I mentioned before, side test calculation is very common in the examination. Okay, and also you should have a very good ideas on chapter 13, 14, and 14A so that you can get a correct result on side test calculation and also some analysis on the compile of the listing rule. Okay, how about the second part? Okay, what kind of information which must included at the announcement? Okay, or any other disclosure requirements? Okay, first of all, okay, because on the final loan on December 9, guarantee given for the loan granted to the affiliate company in aggregate exceeds 8% under the assets ratio. The listed company must publish the announcement containing the full information for the guarantee provided by A to B, C, and E, because they are the affiliate company under the listing rule, as soon as reasonably practicable. The announcement should include the analysis by the listed company on the amount of guarantee given for the bank loan granted to the affiliate company, the term of the guarantee, including the interest rate, repayment method, maturity date, and the securities, the source of funding to repay the committed amount of guarantee, and the bank loan utilized by the affiliate company, which are guaranteed by the listed company. With the guarantee provided by A to B, C, and E continue to exist at the income period's end or any financial year end, the income report or any report must include a combined balance sheet of B, C, and E as the latest practicable date, not only announcement. Please bear in mind the income report and also any report disclosure for financial assistance to the affiliate company. If the asset ratio is more than 8%, any further financial assistance or guarantee should be provided by any affiliate company on or after December 9 is subject to the disclosure obligation. Okay, so that for futures, the company is still required to comply with the listing rule requirements. In order to ensure the comply with the listing rule, then there are some recommended action. Okay, first of all, check the article association to ascertain whether the listed company is allowed to provide financial assistance and guarantee. Second, keep a record of the side test calculation, in particular the assets ratio calculation, to all the financial assistance or guarantee given to the affiliate company. With the assets ratio is 8% or more, then prepare the announcement, okay, which is based on the total asset ratio. And before granting the loan, the company should convene a director meeting to approve the provision of financial assistance and guarantee to affiliate company, as well as the relevant agreement and the announcement and publication on the website of the company and the stock exchange. Okay, so that's the reason why the answer is really, really practical on the condition that you are familiar with the financial assistance and guarantee to the affiliate company. Okay, so that is very common. The question provide you the organizational chart. You need to provide some analysis from your answer book. And based on 4 transactions, okay, you can view this as a headline, okay, and then provide the calculation and analysis and provide the conclusion according to the question requirement. So that's the reason why since chapter 13, 14, and 48 are very common in section B long question, I strongly recommend you should study hard for these 3 topics and well prepare for any question on chapter 13, 14, and 14A.
Now let's take a look on 2021 June. Okay, again, when you talk about listing rule, it's very common to put the shareholding table or the timeline for transaction and also the organizational chart. And before we look at the scenario for the whole question, let's take a look on the question requirements, including that analyze whether the firm agreement that will constitute the CT or CCT, and what are the disclosure obligations which could be triggered. Okay, so that there are 2 agreements on the question: loan agreement and share transfer agreement with the listed company and IFAN. And also another agreement is purchase agreement, 15 mark and 10 mark respectively. This means that you need to spend around, let's say, 2.5 to 3 pages for 15 mark question and 2 pages for 10 mark. Okay, now let's take a look on the company background. The company is a Hong Kong company and the shares are listed on the stock exchange. The company is a kitchenware manufacturer. The board meeting is scheduled to be held next week. Jennifer is the chairman. She asked Robin to propose any agenda item and discuss at the board meeting, so that there are some proposals. The CFO identifies CHE, okay, as an expanding company, which he proposed to enter into the following agreement. Okay, first of all, the loan agreement with CHE, which AH, the listed company, will lend $1.5 million to CHE and pay the interest rate of 2% of the loan amount to the listed company. The second agreement is share transfer agreement with IFAN. IFAN will sell 5% of the CHE shares to listed company. The consideration is Hong Kong dollar 1 million. The following diagram showing the shareholding structure of CHE. And Jing is also a director of the listed company. Judy is Jing's sister. Ivan has no relationship with the listed company or another person. Okay, so that this organization is very simple here. That is the listed company, which hold 100% in one subsidiary, and this subsidiary hold 5% in CHE. Jing is a director, okay, of the listed company and hold 8%. Judy is Jen's sister and hold 2%. Ivan hold 85%, but there is no relationship with the listed company or any connected person. Okay, regarding the first agreement, the CFO proposed to select HML as a supplier by entering into the purchase agreement. The supplier will supply raw material to the subsidiary. The raw material supplied will be used by subsidiary for manufacturing process. The CFO expects that a relative small amount will spend on purchasing raw material under the purchase agreement, and all the percentage ratio will be less than 5%. And Jing is a director of the listed company. She holds 30% of the share in the supplier. This is looked at the above transaction involves several directors and wonder whether this transaction will trigger any disclosure obligation under Chapter 14A of the listing rule. Okay, again, similar to the previous question, This question is really practical for the candidate to understand the connected transaction rule. Okay, let's take a look on the example comment and similar to the previous one. This really depends on whether you are familiar with the listing rule. This question asks candidate to analyze with the agreement in the scenario constitute CT or CCT. With CT or CCT, what could be the disclosure obligation? The comment was that the student performance was very weak, partly because they could not identify that CHG is a commonly held entity under the listing rule. And they were not familiar with the listing rule regarding CCT. In part B, some candidates spent many time defining connected person and unable to identify the connected person in the scenario. Okay, so that in case the student familiar with chapter 14A of the listing rule, he or she score higher mark for that question. On the contrary, students who are poor in chapter 14A of the listing rule, their mark is very low and fail in the examination. So as I mentioned before, you must well prepare for chapter 13, 14, and 14A. And all the question is very practical, and you need to apply the listing rule compliance for the listed company. Okay, we can also use everything you have highlighted and underlined headline. Okay, first of all, loan agreement is the headline. What is the listing rule requirements? The listing rule define a listed issuer group as a listed company and this subsidiary, or any of them. In this case, the listed company group means AHL and this subsidiary, okay, which is a subsidiary of AHL. Jane is a connected person because she was a director of the listed company. Judy is a connected person because she was the associate of Jane because Judy was sister. According to the listing rule, connected transactions are transactions with connected person and specify category of transaction with the third party that may confer benefit on connected person through their interest in the entity involved in the transaction. They may be one-off transaction or continuing transaction. Money lending is classified as financial assistance. Therefore, with the listed company lend $1.5 million to CHE, that could be classified as a financial assistance. According to the listing rule, what is commonly held entity? Commonly held entity is a company which the shareholder include, first of all, a member of the listed company group. Okay, so you can see here, CHE. Okay, you can see that is also a member of the listed issuer group. Okay, because listed issuer group hold 5%, that is a member of the CHE. And secondly, any connected person who individually collectively control 10% or more of the voting power of the company general meeting. This 10% exclude any indirect interest held by the person through the listed company. So that's the reason why, apart from listed company who own CHG, you can see Jane hold 8% and Judy hold 2%. Both of them are connected person. As a result, their total shareholding in CHG is 8 plus 2%, that is 10%. This can exactly fulfill the definition of the commonly held entity. Okay, so that Jane and Judy are shareholder of CHG. Listed company subsidiary is a member of the AHL group. And Jane and Judy are connected person who hold 10%, okay, in CHG, so that CHG is a commonly held entity. The listing will specify the financial assistance provided by the listed issuer group to a commonly held entity is a connected person transaction. Therefore, entering into a loan agreement means AHL lend $1.5 million to CHG constitute a CT. And AHL is not a banking company. And as the loan is not provided in proportion to the equity interest held by this subsidiary, the exemption for financial assistance do not apply. However, the loan agreement may qualify for exemption for de minimis transaction. The exemption applies to a connected transaction conduct on normal commercial term or better, and all the percentage ratio are less than 0.1% or less than 1%, and the CT only because this involves connected person at the subsidiary level, or less than 5%, and the total consideration is less than $3 million. Since the loan amount is $1.5 million, with the transaction meets the exemption for the demanded transaction, entering the loan agreement is fully exempt from announcement, reporting, shareholder approval, and annual review by the INED and auditor requirement, because this is the CCT. Okay, so that's the reason why. Please take a look on all the Chapter 14A requirements on commonly held entity. How about the second agreement, share transfer agreement? Okay, according to the listing rule, substantial shareholder means any corporation or person who can control 10% or more of the voting power at any general meeting of the company. The rule specifies a listed company group acquiring the interest in the company, that is the target company, who is not a connected person is a CT, with the target company substantial shareholder or is proposed to be controller. The controller is defined as a director, chief executive, or controlling shareholders. Jane is a director, and she is a controller of AHL. The stock exchange may aggregate the interest of the controller and its associate in the target company to decide whether they together are a substantial shareholder of the target company. Jane holds in aggregate a 10% interest in CXG and thus a substantial shareholder of CXG, because Jane holds 8% and his sister Julie hold 2%. Okay, so that is 10%. Ivan is not a connected person because he has no relationship with AHL, and he is a substantial shareholder of CXG. The execution of CXG by AHL Group will constitute a transaction under which the transaction includes both the capital and investment natures, whether or not conducted in the ordinary and usual course of business. Entering into a share transfer agreement to sell 5% of the issued share of CXG, that is a commonly held entity, by Ivan to listed company constitute a CT. However, similar to the previous agreement, the consideration under the share transfer agreement is $1 million. With the transaction meets the exemption for demerger transaction, entering into the sale transfer agreement is fully exempt from reporting, announcement, shareholder approval, and annual review requirements. Okay, so even though these two agreements are connected transactions, however, the company may apply for the demerger transaction exemption. Okay, so that the announcement, reporting, approval, and annual review can be exempted from these two agreements. Okay, so that's the reason why the question is really practical. Okay, how about the second agreement? Okay, as I mentioned in the highlight in the question required, purchase agreement with the supplier. Okay, so you can see that this is very common. Okay, provide the raw material by the supplier, which is on continuing basis, and this is the typical CCT. Okay, now let's take a look on the Part B answer. Okay, since the director holds 30% in the supplier is a connected person of the listed company, just because associate that is 30% control company of the director of the listed company, and acquiring the raw material from the supplier constitute a CT. Entering into the purchase agreement to supply raw material from SML to the listed company on a continuing or recurring basis, which is expected to extend over a period of time, could constitute a CCT. And all the percentage ratio will be less than 5%. The company is required to publish the announcement when entering into the purchase agreement. Then how to publish the announcement for CCT? Okay, first of all, term of an agreement. A written agreement must contain the basic for calculating the payment to be made. The periods of the agreement must be fixed and reflect normal commercial terms or better. This should not exceed 3 years, except in special circumstances. HL must also appoint IFA to explain why the agreement requires a longer period. The second should be annual cap for CCT. Listed company must set an annual cap for the CCT. The annual cap must be expected in monetary terms, determined by reference to the previous transaction and figure in the public information of the listed group. If there was no previous transaction, the cap must be set based on reasonable assumption, and the cap must be approved by the shareholders, with the transaction require shareholder approval. Another one is change to cap or term of agreement. Listed company must be compliant with the announcement and shareholder approval requirements before the cap is exceeded or imposed to renew the agreement or to effect a material change to this term. The revised or new cap will be used to calculate the percentage ratio for classifying the CCT. Also, for CCT, the company should have the annual review by the INED. INED must review the CCT every year and confirm in the annual report whether the transaction has been entered into the ordinary and usual course of business, normal commercial terms or better. The terms are fair and reasonable and are in the interest of the shareholder as a whole. Also, the auditor must provide a letter to the board confirming whether anything has come to their attention that caused them to believe that the CCT has not been approved by the board, was not in accordance with the pricing policy of the listed group, with the transaction involved the provision of goods or services by the listed group, was not entered into in accordance with the relevant agreement governing the transaction, and had excessed the cap. Okay, and we understand that according to the amendment of the listing rule, previously, the auditor letter should be submitted to the stock exchange. However, this requirement has been abolished. So please update. There is no need to submit any auditor letter to the stock exchange. Okay, and the auditor should issue a letter to the board, okay, confirming the above matter. And the company should keep the auditor letter on record instead of sending a copy to the stock exchange. The company must allow and ensure that counterparty to the CCT allow the auditor sufficient access to their record for the purpose of reporting on the CCT. This company must also notify the stock exchange and publish the announcement with the IED and or the auditor cannot confirm the matter as required. Then the stock exchange may require the listed company to be compliant with the announcement and shareholder approval requirements and impose any additional condition. Okay, so that's the second part is very straightforward. You need to highlight the compliance requirements for the CCT. Okay, so that's the reason why. First of all, for the first part of the question, please try to focus on, okay, the company health entity. Okay, and also there are also some transactions, even though Ivan is an independent third party, not a connected person. The execution of interest in the target company, which Jane and Judy is a controller, that is also a connected transaction. And more importantly, please also take a look the consideration. Okay, so long as the consideration is not more than 3 million Hong Kong dollar, the CT can be exempted. When you are seeing any sales and purchase agreement, this normally for raw material that is continuing basic, so that they should be CCT. Okay, so that you should know all the CCT requirements under Chapter 14A of the listing rule. In particular, how to identify the connected person in this case. Okay, this is very straightforward to see that Jane and Judy's are connected person, okay, of the listed company. So that please take a look. CHE stands for Company Health Entity. Okay, now let's take a look on the final question on 222 November. And this question not only cover low T bubble transaction and the side test calculation. This question also cover another topic, which is the share capital. That is for the listed company. What is the step for white issue and how the shares could be subscribed by the shareholders. Okay, so that let's take a look on the question requirement first. Okay, this seems that the question is very straightforward, including the step to carry out a white issue and how the shares could be subscribed by the shareholders. That is 13 mark. That is piece by around 2.5 pages. And another question asks about chapter 14 of the listing rule. Define the nature of the transaction. And based on your answer on the nature of the transaction, what measures are required to be taken by the listing rule as a result of this nature? Meaning to say, please calculate the side test. Okay, so that this question is very practical. And please also take a look on all the scenario. Okay, before we use any headline to present the answer for the question. Okay, the type of company is a Hong Kong company and listed on the Hong Kong Stock Exchange. The company has 50,000 shareholders, 1,000 of them located outside Hong Kong. The company will continue to please by the support shown by the shareholders at the AGM, and shareholder overwhelmingly approve all the resolution, which were typically of those signed by a listed company. And Joseph has received a loan of 500 million secured by ways of a trust over the properties, and this is about to be repaid. The director are considering of raising additional funds to pay for a substantial increase in production facility. The finance director think about white issue should be considered. However, some directors are unclear about the required course of action and how the share will be allocated and how they can ensure that all the share being offered will be subscribed. Okay, needless to say, the first paragraph relates to part A, white issue. The commercial director, the company has received a proposal from BIG, the independent third party, to sell a production facility for the company need at a consideration of $78 million. BIG wants to pay the new shares by allotment of 78 million new shares. The commercial director considers this is a big deal, a good deal, and recommend the board proceed immediately with the transaction. However, some directors are unclear as to whether this is feasible and what steps are required. And more importantly, okay, this question also provides a summary of the financial information of the listed company. Needless to say, you need to know how to calculate the side test. Okay, now look at the examiner comments. Okay, and also please well prepare for low T bubble transaction and side test calculation. And please bear in mind to bring the calculator which are recognized by HKCGI. Okay, for the white issue in section A, the question requires candidate to take steps by the listing rule. However, most of the answer was not related to listing rule, so that performance was totally poor. And some students confuse white issue as a share payment, which is totally different. Okay, just because payment of share is not a pro rata new issue. Okay, this means that for share paying, the company may engage the paying agent and search for some subscriber that is potential investor, and by using the paying agreement to pay the new shares to the subscriber instead of white issue. This means that the white share should be issued to the existing shareholder on a pro rata basis. Okay, fortunately for side text and low tier bubble transaction, students score high mark and perform very well for part B. So please well prepare for chapter 14 of the listing rule. Okay, first of all, for white issue, you should know some procedural requirements under the listing rule. Okay, white issue is an offer made by the company to this person member, offering them the right to subscribe for a certain number of new shares. in proportion to their shareholding as a specific price. The CEO permit director to allot share in proportionate to their shareholding. The company should file Form NSC1 with the CR. The right issue is the offer of new share in the form of new paid right NPR to existing shareholder in proportion to their existing holding as a specific price. Offer of security by way of right are required to be converted by reliable provisional letter of allotment or other negotiable instrument, which must pay the time, which is not less than 10 business days, which the offer may be accepted by the shareholders. There is a multi-state corporate action that involves distribution of NPR to the registered shareholders. The shareholder may choose sell the NPR on the stock market and are temporary securities, or accepting all or part of the entitled shares of right. By exercise in full all entitled right, the shareholder can maintain the proportionate ownership in the company without any shareholding dilution. By allowing the rights entitlement to lapse upon expiration, the shareholder ownership in the company will be diluted. Detail and the timeframe of the right issue shall be disclosed in the announcement. The listing rule requires that the right issue need not be underwritten. Where the right issue are underwritten, the underwriter must specify the following requirements, including the person licensed or registered under the SFO for Type 1 regulated activity, and their ordinary course of business include underwriting the securities, and they are not connected person. Or, which is more common, the controlling or substantial shareholders. The announcement on the right issue should explain that the right issue should be fully underwritten, or this was not on a non-unwritten basis. The listing document must include the following details. If the right issue is underwritten, and the underwriter is entitled to terminate that underwriting upon the occurrence of any event or force majeure, or if the right issue is not fully underwritten, the statement of the minimum amount which must be wasted. The listing document must contain a statement in respect of each substantial shareholders as to whether or not that substantial shareholder has undertaken to take up his or her disentitlement in full or in part. If the right issue is not fully underwritten, the shareholder who applied to take up his or her full entitlement may incur an obligation to make a jail offer under the Alpha Code, unless the waiver from the SFC that has been obtained, that is, application for vice versa waiver. If this is likely to occur, the listed company may permit the substantial shareholder to scale down this commitment in the case that the issue is not fully taken up to avoid a general offer obligation. The company should submit the listing document, which is the prospectus, under the CWO at least 14 days in advance, on which it is proposed to register a prospectus to the listing division of the stock exchange for vesting. Once the stock exchange has no comment, the company may deliver the prospectus and other documents to the CR. Then the listing document, including the provisional allotment letter and the application form for the application for excess right share, could be distributed and posted at the website of the stock exchange and the company. The purpose of the right issue is to invite the existing shareholder to provide additional funding. This is also known as the right of preemption on allotment. Since 1,000 shareholders live outside Hong Kong, some of the overseas shareholders may resident in jurisdiction where participation in the right issue could beat the local registration. The listed company may exclude overseas shareholders from preempted issue, that is, right issue. Having made inquiry regarding the legal restriction under the law of the relevant jurisdiction and the requirement of the relevant stock exchange, a listed company should consider exclusion to be necessary or exhibit. In respect of all the share being offered will be subscribed, there are two primary methods. The shareholder may be offered the opportunity to acquire additional shares in excess of their entitlement, representing entitlement not taken by other members, or the right issue may be underwritten. The companies could enter into one or more underwriting agreements with underwriter who will guarantee to take up any shares that are not subscribed in return for a fee. Then the share will be sold in the stock market. The listed company should comply with the following requirements, including that the right issue must be supported by a listing document. A reliable right issue is generally accepted as being an offer to the public, so that the listing document will need to be registered as a prospectus. Regarding the allocation of excess shares, the company must disclose the basic of allocating the excess share in the announcement, listing document, and any circular. The listcom shall also inform stock exchange the basic for allotment of securities offered to the public for subscription, and of the result of any right issue and the basic of any acceptance of excess application. Majority shareholder approval is required with the right issue or open offer could include either the number of issued shares or market cap by more than 50%. The company should also publicly next day disclosure return after the allotment of shares under the right issue. Also, to protect shareholders, the stock exchange has a ban against any right issue that within a rolling 12-month period result a theoretical dilution effect of 35% or more, unless there are exceptional circumstances. For example, the company is in financial difficulty. The company must disregard any accept application made by the constrained shareholders and the associate in excess of the offer size minus the pro rata entitlement. Okay, so that the procedure of right issue may be quite complicated to you, so you should try your best to memorize some key points from the subjected answer. Okay, regarding part B, how to calculate the size test. Okay, first of all, what is the consideration for the transaction? That is the new issue of shares, so that the consideration can be in cash or in kind. For non-cash consideration, particular must be given at the return of allotment, that is Form NXC 1, to file with the CR. The company should check whether the transaction is a notifiable transaction, because execution or disposal of asset constitute a transaction under Chapter 14 of the listing rule. Okay, now let's take a look on all the side test ratio. Okay, how to calculate the side test? Okay, first of all, what is the amount of the total asset? Okay, from the question requirement, we find that, okay, the consideration is 78 million Hong Kong dollar. Since there is no market valuation report, we can rely on this amount at the exit of the execution of the transaction, and also the total asset of the listed company. Okay, so that you can see the amount is, okay, $2,900 million. Okay, so that we get the exact result is 2.69%. Okay, how about profit ratio and revenue ratio? Okay, since the question has no information on profit and revenue, okay, for that transaction. Okay, so that's the reason why NA. Okay, just because the production facility cannot generate the profit and revenue, so that we can in the side test checklist, please provide not applicable. How about consideration ratio? Okay, you can see the denominator is the market cap. Okay, so you can see $1 per shares. Okay, so that the total number of issued share capital is 6,100 million shares. And also consideration is 78 million. That is $1 per share. Okay, so that you can see the result is 1.28%. So what is the implication to the transaction? Okay, 2.69%. However, unlike the cash consideration, since the new issue of share is the consideration for the transaction, equity capital ratio apply to, because Hong Kong company has no par value, so that the aggregate capital is the number of shares issued by the company as a consideration, divided by the number of shares in issue. Okay, so you can see that's very straightforward. The new issue of share is 78 million shares, and the issue cap is 6,100 shares, so that the result is 1.28%. And please also list out all the 6 types of transactions according to Chapter 14 of the listing rule. In summary, the transaction between the company and BIG is a share transaction because even though all the side test result is less than 5%, but the consideration is using new issue of shares. So that the transaction must require the notification to the stock exchange and publish the announcement, but there is no shareholder approval requirement. After the term of a share transaction has been finalized, the company must publish the detail of the transaction in the announcement. The company needs to check whether the number of shares to be allotted for the transaction is covered by the general mandate. If not, the refreshment of general mandate or a specific mandate to issue the consideration share at the general meeting is required. The total number of new shares to be allotted must not exceed the 20%. After the allotment of the consideration shares, the company should also publish the next day disclosure return. So that this question is very straightforward. Okay, only announcement is required for the share transaction. Okay, in conclusion, we have go through all the past exam paper for chapter 13, 14, and 14A. We also see that they are the common question in section B, and I can also say that every time when you are talking about in section B, there should be at least one question asked you about the listing rule, and some of the questions may cover all the 3 chapters. Okay, something like about the chapter 13, 14, and 14A, that is 2022 November. We must apply chapter 13, 14, and 14A for that question. And please also read the question carefully and understand the focus of the question. Whenever the question asks you about the listed company, please apply listing rule instead of the company orders. Unless the company is a Hong Kong company, let's say because of our allotment of shares, we can mention about file the form NSC1 with the CR. Other than that, please focus on chapter 13, 14, and 14A. Okay, in conclusion, okay, section E is one of the key topics in our syllabus. So that's the reason why, first of all, when you prepare for the examination, you should try your best to understand the focus on the previous past exam papers. And my PowerPoint also provide you some guideline how to study the CGI study pad. And then after you understand all the listing rule requirement from chapter 13, 14, and 14A, please also provide some revision on the past exam paper and learn more exam strategies, okay, on how to present the answer. And as I mentioned before, please also provide some headline after you identify any key issue from the question. Okay, thank you for you to attend today part 4, okay, of the exam technique workshop. Okay, we can meet again in the final part of our revision, okay, in CG's QP exam preparatory program. Okay, thank you. Bye-bye.